That jobs report and the sell-off in bank stocks, I'm joined by Shana Sissel, founder and president of Banríon Capital Management. Shana, thanks so much for joining us. I mean, let's get straight to it and to that Fed jobs report. What's your take on it? On one hand, it feels like the labour market's still hot with hundreds of thousands of jobs being added, but on the other hand, with wage growth seems to be easing somewhat.
Yeah, so it was a mixed report, but not as strong as some had expected, which is a good thing, but not as weak to necessarily have the markets see it as a favorable thing. So it's good in that it shows that the labor markets are starting to weaken a little bit. Some of the pressure on inflation is starting to be relieved. So that's a good thing for the Fed. That's what they want to see. But it still shows that the labor market in the U.S. is doing well. And so when I look at it as the Fed's going to see this as a positive, not weak enough for the markets to feel confident that the Fed isn't going to continue to be aggressive, but does give the Fed pause, given all the other things that are going on right now, to maybe reconsider that 50 basis point hike that they were talking about earlier in the week.
Yeah, you talked about what Jerome Powell was talking about earlier in the week, and you talked there about inflation too. I mean, that's still a concern for these Fed policymakers. How do you think they're going to digest this? I mean, wage growth is still growing, but maybe not as much.
Well, that's the positive. They're seeing some of the pressures on inflation start to subside, so that's a good thing. But inflation is still a concern, and the CPI number next week becomes all that much more important. The Fed is kind of in a corner right now. They have this stress in the banking system that is a result of their monetary policy. They have a labor market that's still quite hot. Although it does show some signs that it's starting to cool slightly. And so now they have to make a decision of whether they hike 25 or 50. And it seems like Powell's comments earlier in the week was a million years ago. It really does, because he was very aggressive. He was very hawkish. 50 basis points seemed to be a given at the time. And now we have stress in the banking system, signs of cooling in the labor markets, and that CPI number is going to be, everybody's going to be watching it, because that's really going to be the final decision piece of information that the Fed needs to make the decision on 25 or 50.
Well, let's turn to banking stocks. You mentioned there briefly the problems that SVB seem to be impacting bank stocks globally at the moment. Are you surprised by this? Would you be buying financial stocks right now?
I would not be buying financial stocks right now. I'm not surprised that we're seeing some contagion. The SVB is a very unique bank. 50% of startup tech companies bank at SVB. They have a lot of other relationships with those companies, not just in their banking, having their accounts, but they also do venture debt. They do lines of credit. They do things of that nature. So in many ways, a lot of those companies actually can't leave the bank. But we are seeing stress there, which is a result of the technical aspects of having very low deposit rates, but there are very high rates in treasuries and the like. So people are actually moving their money so that they can get better yield, because cash just isn't paying. And then you have the venture capital aspect of the cash burn because of the environment we're in. So there's a lot of things going on here. But the thing that does impact all banks is that low deposit rates that they're paying on savings and deposits into their bank versus what most folks can get in CDs and things of that nature. So they're kind of moving out of that, which puts a lot of pressure on the banks. And if they have to increase the rate that they pay on deposits, that puts pressure on net income margins. So there's a lot going on here that's not good for the banks.
Well, one thing that is definitely weighing on investors' minds over the last few weeks, especially probably today as well, is volatility. What's your top tips to sort of navigate that sort of that problem of volatility?
So I talk about this a lot, but I'm a huge fan of using liquid alts to help for risk mitigation and risk management. And the products that fall into that bucket actually also do really well when volatility is rising, because just the nature of the types of strategies that they are. So things like global macro, managed futures, equity market neutral, hedged equity, those types of products will do better in a volatile environment just by the nature of their investment strategies than traditional, just stocks and bonds. So I have pretty healthy allocation to things like that. ETF like BTAL, FMF, THY, MRSK. Those are some of the names that I'm using in that space to kind of mitigate the risk in the portfolios and be able to ride out this volatility for the time being, because these are the types of strategies that can do that.
Shana Sissel from Banríon Capital Management, many thanks for your time.